Gee, good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, like all our webinars and shows, is for informational purposes only, concerning Market Chameleon tools and products. With that, let's welcome Dimitri. How you doing?
Good morning, Will. How are you?
Great. So today we're talking about option premiums across multiple stocks.
Yeah, let me share my screen. And what we'll do is take a look at a tool that allows us to visualize option premiums. If you look at straddles, option straddles, and be able to compare them across a group of different stocks. So let's first go to this tool. It's up top on the menu under options. If you go to the right-hand side, there under tools, you see Straddle Compare. Click on that. And then you'll come to this page. And on this page, it will default to this graph up top. And you could change this graph by controlling these different parameters. Okay, so by default, it selects a group of stocks, which are the Dow Jones Industrial stocks. So these are the Dow Jones stocks. If you look at these comparison groups and drop it down, you have some presets there, which are different sectors in S&P 500. If you wanted to bring them up and compare that group of stocks, you could create your own watch list and have a group of stocks that you track unique to whatever you select. If you would say you created a watch list, whatever, social media companies or anything you want. If you have a watch list, you save it, you could bring up those group of stocks by selecting it down here. Okay. So look, but we'll keep it on the Dow Jones stocks for our example. And since we are comparing option premiums, we do have a few different metrics to select, and that's this drop-down menu. So here we could look at the money straddle one-day change. How much did the straddle change from the previous day? So the idea there is if we look at the particular expiration that we selected, which is over here. So here it's defaulted to April 17th, but you could drop this down and select a different option expiration. Let's keep it on April 17th. The reason for that is we're looking at actual option straddles. So these aren't like derived implied volatilities. We're going to look at the actual option straddle. And we want to see which ones gained or lost value on the day. So think of it as if we looked at the previous day's closing straddle. So we looked at April 17th. We looked at the nearest at the money straddle. And let's say if it was $3, buying the put, buying the call, if it cost you $3, what we want to see is, well, what is it now, right? So then the next day we look at the straddle from the close. So we're tracking it from the previous day's close. Did it go to $3.10, $3.20, $4, or did it drop from $3 to $2? And that's here we show this in percentage change. So if it went like from $3 to $3.30, that's a 10% gain. If it went down to $2.70, that's a 10% loss. And we have these 4 quadrants in here. Okay, so the quadrants are showing if here if the option straddle gained and what did the stock price do. So if the stock price was up, so you could see here on the bottom, if the stock price was up on the day, it'll show up in one of these quadrants. If the stock was up and the option straddle was up, it'll go over here to the right. If the stock was down on the day, it'll show up here. So over here, let me hold on a second. Let me just refresh my screen. I started clicking too much. If the stock is down on a day, it'll show up to the left in one of these quadrants. So here, stock price is down, but the option straddle's up. Stock price is down and the option straddle lost value. Here, stock is up and option straddle is up, or stock is up and option straddle is down. So then we could see how this group performed on the day. Were most of these stocks up on a day? If they were, they will show up here to the right. If they were down, they'll show up to the left. So we could see here that more of them were up on a day than down, kind of eyeballing that. And the most of them look like that the straddles gained in value. So those that were up to the right, we could see most of them ended up here in this quadrant. So they clustered where stock price is up and straddle price is up, right? And the stocks that were down on the day to the left, looks like a lot of them, those straddle prices were either unchanged or down. Okay, so that's a little bit of a dispersion there. You could see here, group part of them ended up to the left-hand side and down, part of them to the right-hand side and up. So this kind of shows us now what, and each of these are particular stocks. So if you hover over, you could see like over here, Walmart as a WMT, that's Walmart. If you hover over it, it'll give you more details. The stock price was up 3% on yesterday. The at the money straddle was up 18%. Okay, and this was referencing the 85 strike on April 17th. You could see that the current midpoint of the call is $4. The current midpoint of the put is 88 cents relative to the previous day where the call price was $2.20 and the put price was $1.93. Okay, so you could see that straddle, if you combine the call and the put price, right, $4.88 versus the previous day of whatever that $4.10 or whatever that ends up being. So that shows you the dynamics of the market, right? What are the stock prices and option prices doing? Okay, so that is really quickly to get a sense of what's going on in this particular group of stocks as far as the option prices in the strat. We could also drop this down and look at the change in the 25 delta put or call. What if we wanted to see how did the put option behave relative to the previous day or the call option? So we could just scroll down here, select the put, reload, and now this will show us what the stock price did. So you could see here these stocks are still up on a day, but here in Walmart you could see that the put lost 58% of its value. Now this isn't the at the money put, this is the 25 delta out of the money put, right? It tells us here it's the 82 strike, and then the put, well, we see the call and the put value, but you could see here that the current put is 37 cents versus the previous day it went out at 89 cents. And this lets us now see how did the out of the money puts behave in these group of stocks. So most of them look like they're lower, right? Because this horizontal line, right, that shows us where the below is lower. and what the stocks did. So most of the stocks were up, right, and the puts were down. So let's see how the calls behave, right? If most of the stocks were up, did the calls themselves gain value? So we're looking at the out of the money 25 delta calls. So let's go here, 25 delta call, reload. And here we now see the out of the money calls. So the best one, the best performer was this SHW, Sherwin-Williams. The stock price was up 2.8%, but the call gained 158% return. So here we see we're referencing the 350 strike. The call midpoint is $8.20. The previous day, it was $3.18. So you could see that that call had a significant gain, 158%. Walmart, that stock was up 3.1%, and that call gained 135% in value. And we see that a lot of them maybe clustered around here. Some of those calls lost value. For example, Microsoft was down on the day, and that call price lost 44% of its value. And quickly now we could just learn from here or visualize, the dynamics between what the stocks returned versus what the options returned in our particular group of stocks that we're monitoring. All right. And keep in mind, you could do this for a group of stocks that you track yourself uniquely. Okay. Let's now go to, let's say, the at the money IV. So we could see how the implied volatility changed. So let's reload that. And now we're looking at the implied volatility on April 17th for these group of stocks. And we could now compare what the implied volatility did versus stock behavior. So here in Sherwin-Williams, the stock was up, but the implied volatility was also up. Okay, so that could explain two things: why the call price increased in value, because the stock was up, just like we saw, but implied volatility added to those gains as well. So you had a delta and an implied vol gain. Here we could see that the implied volatility was up in a bunch of these stocks that were also up. So it's kind of like, usually, right, it's a little bit counter to what usually happens, where the stocks, as they drift higher, implied volatility comes in. Here we're seeing that there's a decent amount of stocks that were up from the previous day, but the implied volatility was also up, indicating that traders, even though the stock was up, still see increased risk or volatility going forward. Okay. Some of the stocks that were up in this quadrant, we could see implied vols were down. Like Merck was up 0.6%. The implied volatility was down almost 10%. Nike, the stock was up 0.3% with implied volatility down 5.6%. These stocks that were down, here's Boeing. Stock was down 1.6%. Implied volatility was up 4.4%. This lets us quickly see how the implied volatility and stock behaved on the day. And now we see the Dow Jones here in our group. If we wanted to go to a different expiration, Maybe you want to go a longer term or shorter term. We drop down this menu. And if we wanted to go out, let's say, let's go May 16th, select May 16th, reload it, and this will bring back the May 16th expiration. Okay, so these looks like a little bit more scattered, less clustered, with the stocks that, like you can see, showing in the May 16th expiration, the implied volatility did go down relative to the April. So this lets us change the option expiration, and view what happened there. Same thing with, at the money straddles. Let's say we want to look at that, the money straddle, May 16th, just reload it, and that will bring up the at the money straddle change. One more thing we could look at is what is the current premium in the straddle. So you see these tabs, click on that. Now this will bring up a comparison group. You'll have to hit load, but let's leave this at the Dow Jones Industrial. You could click on that and choose a different group of stocks and an expiration. So if we load that up, now we get this different graph. Now this graph over here, you could see has the stock symbols. Up to the left-hand side, it shows us let's look at the bottom. On the bottom, this shows us the dollar value of the straddle. Okay, so, Goldman Sachs, if you hover over the straddle premium, so if you bought on April 17th expiration, if you bought that the money straddle, it would cost you $37.94. Okay, so that looks like the most expensive straddle dollar terms, but the straddle price is relevant to the strike and the stock price. So what does that mean in terms of stock price? So if we took that straddle premium and divided it by the stock price, how much premium are you paying? If you have $100, like if you have $100 stock at the money straddle is $10, well, you're paying a 10% premium. It has to move 10% in either direction to break even. But if the stock is 50 and you're paying $10, now the stock has to move 20%, right, to break even. So this is the percent on this side. So we could compare the dollar value versus the percent. So you could see percent wise, NVIDIA is the highest straddle premium at 8.7%. The straddle is $9.39. Okay. The next one looks like it's Goldman Sachs at 6.9. Then you got UNH close to that, 6.9. And the ones with the lowest premium are, let's say, McDonald's, 3.4%. Procter & Gamble over here, 3.8. So we could kind of get a sense of these premiums within April 17th expiration. And it could be useful if you're looking at a group of stocks where you think that they might converge and start moving similar, some are undervalued, some are overvalued. But it's a quick way to visualize the straddle premiums and relative costs within the group that you're analyzing. Okay, so let's say we're looking at, instead of Dow Jones, let's say we're looking at, let's pick the financials. So here, the financials it's a bigger group, XLF, but here we see the ones with the lowest costs, either in dollar terms or percentage, and the highest costs, and where they cluster, right? Where they cluster, where are the ones that are kind of outside, this cluster. So Will, I think I covered most of this tool. I think I covered the tool, so I'm going to stop right there.
That was awesome, D. Thanks for the wonderful webinar, my friend. You have a great
Thank
day.
you.
Everyone, thanks for joining us. Remember to like us and follow us on YouTube, Instagram, Facebook, all the social media outlets. Great job as always, D.
Thanks everyone for joining. Stay safe out there and have a great trading day.
Trade in peace, chameleons. Everyone have a great day. Bye-bye.